Unfortunately, one thing that I don't think anybody would like to see is sort of like you get there and all of a sudden you go, well, we'll extend it for 2 weeks. Well, we'll extend it for 2 months. We need 2 years or more in order to, solidify people's expectations of how they can undertake long-term investments to further the economic recovery. That's critical.
Just how worried are you that gridlock is going to mean a possible another downgrade or worse for the US economy?
Well, I'm very concerned about, the effect that the furthering of these discussions in Washington that come to no good end can do to the business community, can get in the way of the economic recovery that we need so much in the U.S. Businesses are continuing to think about what the implications of the fiscal resolution are going to mean for them. We need fiscal consolidation over the appropriate time horizon. There's no doubt about that, but we don't need it today. We need it in a couple of years. We need to put those plans in place, and we need to fundamentally support the economic recovery.
If you look at what's happened since 2008, interest rates virtually at 0%, $2.3 trillion is a figure which is said to have been spent by the Fed, yet we have unemployment at 7.7% still. Why?
We've been going through a period of very strong deleveraging. The financial crisis left a lot of people with debt on their balance sheet, where if they had understood the circumstances they'd be facing in the years before when they had accumulated that debt, they would not have done that. So everybody's been wanting to save, get rid of their debt. Businesses have found that there are fewer customers coming through the doors, and so they've right-sized their operations, and they continue to tinker with that. Once we get through that deleveraging process, then things would be better off. I think our accommodative policies have helped foster a quicker deleveraging, but it's still taking place. And we focus a lot more on inflation, and I think it took us quite a bit of time to fully embrace the full balancing of our dual mandate and putting a little more emphasis on the unemployment rate, as we rightly should have.
Do you think now having this more transparency, if you like, of these specific targets is going to quicken the pace of recovery?
I think that it's helpful for that. And, in fact, I think that financial markets already thought that we were going to have accommodation in place for a long period of time. And so at the margin, it may not have helped as much as I might have thought or would have liked. But the thing that is really deadly for what could adversely affect our policies is all of a sudden people became very nervous that we weren't going to have the wherewithal to continue with this, that we would withdraw the accommodation prematurely. I mean, I sort of look at Japan and how they've gone through 5 recessions in 15 years, and at various times when inflation was beginning to perk up a little bit, then they wanted to withdraw some of their accommodation. All of the macro theory, in my mind, speaks to the point where you need to be very convincing to markets that you're going to be in there for a long period of time, adequate period of time, and then they'll make the right decisions on the basis of that.